Hi everyone. In previous lessons, you learned how to identify supply and demand zones, and you learned how to qualify valid and strong ones. But no matter how strong a zone is, you will always need to seek additional confirmation before taking any trading decision. One of the most important price action patterns that can be used as a confirmation signal is the pin bar candlestick pattern. The general idea of what we are going to do is use our current understanding of how to trade pin bars as our trigger for entering trades at supply and demand zones. Let me give you an example. This is the Euro JPY for our chart. This is a clear demand zone. The move is quick and strong. The candles are big, which indicate that this move is made by a financial institution. The zone is fresh because it has not yet been tested. The previous resistance level is broken. And the risk to reward ratio is very attractive. So when the market retraced back to test this zone, we can't enter the market blindly. We still need additional confirmation to place our buy order. So as you can see in this example, the formation of this pin bar indicates rejection. That means sellers were rejected by buyers when the market approached this demand zone. This pin bar candlestick pattern indicates that a reversal is likely to happen. This information is very important for us as supply and demand traders because it helps us confirm our entry. So to enter the market, you place a buy order at the close of the pin bar candlestick pattern and a stop loss below the distal line. The profit target is the next resistance level. As predicted, the market went strongly up after the formation of this pin bar candlestick pattern. Look at another example. This is the Euro JPY for our chart. This is a clear supply zone. As you can see, the move is quick and strong. The candles are big. The zone is fresh. The previous support level is broken. And the risk to reward ratio is good. So when the market retraced back to test the supply zone, prices were rejected, forming this nice bearish pin bar. This strong rejection is an additional confirmation that helps us take our trading decision with more confidence. So to enter this trade, you place a buy order at the close of this pin bar, your stop loss is above the distal line, and the profit target is the next support level. Look at another example. This is the Aussie US dollar for our chart, and this is a clear supply zone. As you can see, the candles are big, the move is quick and strong, the zone is fresh, the previous resistance level is broken, and the risk to reward ratio is attractive. When the market retraced to test this supply zone, we got two price action signals to enter the market. A bearish pin bar, as you can see here, and a doji candlestick pattern. So to enter the market, you place a sell order at the close of the pin bar. The stop loss should be above the distal line, and the profit target is the next support level. So this is how we use pin bars as confirmation signals in conjunction with supply and demand zones. See you in the next lesson.